Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, November the 1st, 2012. I'm looking at the S&P 500, the SPX, and also the VIX today. As you guys know, we've been looking for this bounce here. We've got the bounce that started very nicely to the upside, and we are looking at this as being a downtrend. You have this high point here, lower high here, low point here, lower low here. You're obviously in a downtrend in this scenario. When you turn from an uptrend to a downtrend, the best shorting opportunities will be at the 50-period moving average or above it. You can see over here, it's this red line right here indicates the 50-period moving average. So with this activity here, see price activity very close to that level here, we want to start looking for short opportunities. So when we get tomorrow's activity up to the upside, if we get any move to the upside here, that'd be an opportunity to be looking for short signals, some kind of shooting star, something that we can use to tell us that we're starting to peak out again. We want to get short. Shooting star looks much like this, or like this, or like this, anything like that, even something like this will probably work. So we'll be looking for this, some kind of sell signal on Friday or maybe even Monday, depends on how the market comes out. The market will be totally focused on the jobs number that will be out on Friday. However, I don't really give much weight to the jobs number. If you look at the news headlines that have been coming out week after week after week, you see company after company announcing that they plan to lay off 1,000 people here, 1,500 people there, 10,000 people here, 3,000 there. How can you expect to have a jobs number that's improving? Do you see any headlines coming out saying we're hiring? No, you don't. You see people saying we're cutting, we're cutting, we're cutting. So yes, the job number can go down for reasons that we won't discuss right now, but it won't have anything to do with the fact that the employment picture is getting any better. So keep that in mind. Let the markets jump to the upside and keep an eye out for the peak because you want to get short in a downtrend. The VIX, or the volatility index, runs the inverse, or the opposite of the S&P 500. So whenever you have the VIX that's very bullish, you should see the S&P very bearish and vice versa. What I want to show you today on the VIX is very important. We talked about this 5 or 6 days ago. When we had this massive gap, we marked the chart saying, you know, there's a gap on this chart, which means when you have a gap like that, typically they're going to end up filling. Whenever that fill happens, that's your opportunity to take advantage of that. And so we have now pulled back down, filling that gap. When you had a close here, then the following day you opened up here, that created this gap. And so for the past couple of days, we've just been filling the gap. Now that we've filled it, I'm interested to the long side for multiple reasons. Number one, note the gap that we have now. Here's the close of yesterday. Here's the open of today. Now we have a gap above us. You know, we've also pulled back down to where? Near the 50-period moving average. And because we are in an uptrend in the VIX, then we'd be a buyer of the VIX when she comes to the 50-period moving average or below it. I would, if we were to see some kind of activity tomorrow, like a sell-off, something like that, and pull down to the 50-period moving average, somebody could be a buyer of the VIX with the stop set off of this low at 1450. So one cent below that, your stop would be here. You'd be a buyer at the 1590 level or lower, and then we're looking for a reversal test of the previous high to fill this gap at the 1850 line. That's something to be looking at. It's very important, a little piece of the puzzle there, because it will be confirming the S&P 500. So we want to watch these two in tandem. Also, if you're going short the S&P 500, it doesn't make a lot of sense to be going long the VIX. You're making the same trade twice over. So keep that in mind as well. This is actually a really good chart. I like this activity that we see today. Another day to the downside, even a hammer candlestick formation, and I would be marking it as something that you probably want to buy if the following day started moving in the other direction. So this is just kind of a heads up, let you know that I'm watching this chart now. As always, these charts are kept on the free website at PerfectStockAlert.com. You check it out. It's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I'll see you in Friday's market analysis video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.